Hey guys, this is Gabby from The Savvy Professor. In today's video, I will discuss the differences between ITOT and VTI. Watch till the end to know the final verdict on which is better, but first let's start with the differences. So the main difference between them is their underlying indices. iShares passively manages ITOT to replicate the performance of the S&P Composite 1500 index. On the other hand, Vanguard indirectly manages VTI according to the performance of the CRSP US Total Market Index. Therefore, ITOT and VTI are indirectly managed to replicate the S&P Composite 1500 indexes and CRSP US Total Market Indexes performances respectively. Performance: although the two ETFs have a close return-based performance output, VTI slightly outperforms ITOT for short-term performance. ITOT has so far achieved a maximum return rate of 5.88%, 0.03% lower than VTI's 5.91%. Conversely, ITOT returns outperform VTIs for longer time frames. For instance, their average annualized returns for the past decade are 12.11% and 11.93% respectively. These returns yield a 0.18% margin, ITOT outsmarting its VTI counterpart. Therefore, the ETFs tie in this category as they outsmart each other's performances for short and long time frames. Investment risks. While assessing their investment risks using volatilities and experienced drawdowns, ITOT presents with fewer investment risks than VTI. However, their investment risks based on their respective Sharpe ratios indicate lesser risks in VTI than ITOT, though by a small margin. Therefore, ITOT and VTI tie in this category again as they outsmart each other's investment risk, depending on the adopted assessment metric. But do they have similarities? ITOT and VTI present more similarities than differences. For instance, they both have a 0.03% expense ratio, meaning they charge their investors equally for equal stock shares. More so, the tiny inconsiderable margin between their ETFs indicate that they experience identical stock price shifts due to market forces. To sum up, which is better, ITOT or VTI? I feel like investing in VTI is just like investing in ITOT and vice versa, as they present almost identical provision with very slight margins. I'm convinced that the ETFs are equally convenient, and settling for one over the other will depend on the investor's choice of the underlying index, as the indices expose their replicating funds to the stock market differently. Please note, the information compared in this video is accurate as per the making of this video and is subject to change in future. Feel free to check out the products from the links in our description. Thanks for watching!